Right, so welcome everyone and welcome to the India market review for the week ending Friday 21st April 2017. So we've had a 2-week break and we are back to the IMRs as usual. And the question that we have today is do we have a top in place for the Indian markets for the Nifty? And we want to basically answer that question first in the first part of this IMR, and then in part two we'll have a look at some movers and shakers that have happened over the week. So while I was just having a short discussion before we started the IMR officially with Ramesh, I wish I had recorded that because he did a wonderful summary of events. So the events to look forward to in the coming week, over this weekend, etc. Number one is the French elections. There are 4 candidates there. 2 are pro-EU and 2 are anti-EU. And then we've had this, of course, unfortunate one more terrorist event of a policeman being killed in Paris, and whether that will affect the election outcome or not. The most recent election reviews on France have tipped it to be extremely finely balanced, and apparently just a few thousand votes this way or that way could make all the difference in who wins and who loses. So I'm sure most of the world will be watching. Then moving on, as Ramesh correctly and very aptly pointed out, global tensions have sort of reduced, especially North Korea. Not that the problem has gone away, but seems to be a little bit on the mend. A lot of coordination looks like going on between US and China in order to put pressure on North Korea. And there's also the fiasco of the US Navy fleet, whether it was going, not going. The South Korean uh, news not very happy about the whole drama that was played out when US said they are heading towards North Korea, and then actually they were going somewhere else. The Carl Vinson, I think, the aircraft carrier. Other than that, we have our, well, Trump seems to have gotten into some sort of, I think, what do I say, a mode, picking fights that he could perhaps win, not going too aggressively after things that are very challenging. For example, the next thing that was supposed to come up in the US, as per Trump's own statement after the debacle of Obamacare, was the reform of the US tax setup. As far as I know, nothing has happened on that front, and instead we've had these other events that are happening. Most importantly for us, India, is the H-1B visa program changes, the executive order, which removes the lottery system and makes it merit-based, and what the details are I'm not aware, but there seems to be quite a lot of angst in the IT space. 2 industry bodies, NASSCOM saying that it will not have any effect for this year, Ashokam on the other hand saying that there will be layoffs on account of H-1B impact on Indian IT companies. Also, some of the results that have come out for the companies like TCS, etc., not very promising on the annual results, quarterly results front. So that is something also to just keep in mind. Um, and
Yeah.
then we've
One
got,
more thing is,
yeah, go on, Ramesh.
uh, one, one more thing is today's news. So Wipro is going to lay off some 600 people. Also,
Right.
people are estimating it will be more than 2,000. And Cognizant, they have a target to lay off 10,000 people in India.
Right. So according not only layoffs, so earlier it was slowing down of new hires. Now we've got straight layoffs going on. Some of my friends in the IT space in the last few days have been telling me that you've got very straight faces and very worried faces within the companies in the last few days, especially after the H-1B. So a lot of lives have been directly and immediately impacted by that H-1B visa change. So it'll be interesting to see how the industry adapts. to this and what the
No,
long-term consequences of this could be.
not
Um,
on, not only US, Singapore also they have done restriction for these
right.
visas, and
So
Australia also.
right. So whether it's Australia, the 457 program, I think, and New Zealand also has been making some noise, Singapore and all that. So everybody is starting to look inward. Now the problem for us is we are not really a thriving internal IT economy. Of course, there is talk about Indian IT companies reinventing themselves to support the Indian IT space and all that, but you really can't do that overnight. It's going to be a real big challenge, and there'll definitely be a lot of people who are going to be left behind in this transition. So it'll be interesting to see how things pan out. Uh,
Definitely, they will not get the margins what they get in dollar denomination, right?
no,
In
no,
rupee
not. I mean
denomination.
that, of course. I mean that will definitely not happen. But I'm looking at the employment issue. So I
Yeah,
think
yeah.
and this is going to hurt because there's a cascading effect. It's not just that IT employment will come down because of every one IT jobs. There are probably another 5 to 10 ancillary jobs that get supported. People buy houses, people have their children go to school, people buy cars, people spend that money, and so it's going to definitely have a cascading effect on the entire industry. And it'll be interesting to see how the government reacts to this and manages this, because it is potentially a dampener on the GDP growth for the next few quarters. So it'll be interesting to see. And not only that, I mean, I think also the bigger picture is the employment generation, which will definitely come down. And at least I'm not aware of any concrete employment generation programs that the central or state governments have. They're talking about it, but I'm not aware of any action. And this is just going to make it a lot more difficult. And then, this whole thing we've been speaking about earlier about automation and all is just going to, I think, go up like crazy. And I'm not seeing a silver lining at this point. So we'll have to see how this pans out. One more point to note, I think this weekend, of course, again is the Delhi elections in India, and whether AAP and Kejriwal comes back, doesn't come back, whether BJP wins or Congress is able to make a comeback. It'll be interesting to see. The BJP's being card being that if we have the central government as BJP and the Delhi government as BJP, then things are really going to move faster for Delhi, etc. It's a strong point in my opinion. And interestingly, Kejriwal sometime today afternoon said that if you as in the voters of Delhi bring BJP back, and then if your child gets dengue, then it will be you who will be responsible, the voter. I'm not sure what the logic is, and some of the commentators were saying that Kejriwal might have already sort of conceded defeat. But well, I guess we'll know in about 96 hours or less as to who wins there and whether that's going to have any impact on the I don't know whether it'll have any impact on the stock market, but then overall politically it's going to be all great. Talking about politics, lot of realignment happening in the political system in India to take on BJP for the 2019 elections. I don't remember any time before where 2 years before the elections things were really getting into gear. So on the one hand, we've got BJP, Amit Shah, last week announcing that he's going to tour all the state capitals over the next 95 days to start putting in place the 2019 campaign, general election campaign, and now the opposition is talking about coming together and forming a front against the BJP. So a lot of maneuvering and all that which is going on. It'll be really interesting to see how this pans out both politically and economically, and whether the state governments or the central government start to do something populist things, given that the general elections and state elections, and then we have state elections in Karnataka. So we'll see how whether Congress is able to survive here or not. And moving forward into the next few weeks and months, one of course is the ongoing result season. But more than that is two things. The monsoon is expected to be normal according to the Indian Meteorological Department, so that's a relief. However, the last few normal monsoons, while normal in the aggregate, have actually been very abnormal at the ground level. Okay. And then after the monsoons, we've got GST and the implementation of the GST, which again has gone off the news, but looks like it's very much on the track, and the government is pretty determined to have that happen. So those could be the monsoon and the BJP say winning Delhi plus the GST over the next 2-3 months could be good positives for the market. On the other hand, the results so far have really been nothing to cheer home about as far as the markets are concerned. So in a sense, it's a mixed bag. And then, oh yes, of course, nothing that significant, but we have the elections that have been called for, general elections in UK. So whether the Brexit gets a boost or, Prime Minister May gets less moral authority, we'll know soon how that is going on, right? So these are the main points to consider. So a lot of things to think about, especially for longer term investors and traders. Of course, on the other hand, there are a lot of stock specific moves that are happening depending on sectors and stocks, etc. So hopefully we'll touch on those in part 2 of this week's IMR. Okay, so let's first jump in and look at the question about whether we have a top in place, and what you should be looking at is the NSE 50 chart on your screen. So the Nifty, a little cluttered. Let me hopefully make it right. Okay, so as you can see, or let me make it even clearer. Right. Okay. So it's taking out all studies to. Okay, I think we had one more. 1 second. Okay, so just keep it on this. It's just price and volume, and what you can clearly see is that in the last February, March, we had a nice uptrend, and then what we've had in the last 12 trading days is actually a move very much down, and you can see that the move down is perhaps getting accelerated. We definitely have a downtrend line now. We've got lower tops and lower bottoms. There is absolutely no doubt about that part. So that's where it is. And so while the market did recover from its lows a little bit today, in the short term we clearly have a downtrend for the last 2.5 weeks. And the real support of this downtrend, if any, is at around 9,000 levels. So according to this chart, and my view is that we could definitely see 9,000. There's a good chance that we could see 9,000 on the Nifty in the coming few weeks, or maybe for that matter in the coming week itself. It's just 120 points down from where we are right now. That would just happen in 1 or 2 days. Remember, on this day, that was Wednesday, the market was up about 70 points, 75 points, and then it lost the entire up move in the last 1.5 hours, and then traded down and closed in the negative. Today also went up during the first part, but then lost most of its move in the second part. So the Nifty overall, I would say, is headed towards 9,000, and then we would review what it does once it comes to that level. Or even on the, you look at any parameter, including the indicators, any indicator that you want, whether it's price indicators like MACD, RSI, stochastic, as is in what you can see on this screen, or you could see even in the the volume-based indicators. You have got price volume trend and OBV, on balance volume. Nothing to say here that we've got any strength at this point for that uptrend. So clearly, I think the move is in the short term it is bearish. However, can't rule out the long term is very much still bullish. There's no doubt about that. All the long-term moving averages, in fact, the 200-day moving average is at 8,600. So one definition of a bear market is the market below the 200-day moving average, and we are definitely, quite a bit away from that. So technically, at least by definition, we could maybe fall another 600 points and still be in a bull market. So in the short term, upside looks extremely limited, and the downside to 9,000 looks very, very likely. Now, having said that, would like to tie this up with our global market review. And before we jump in, let's look at Yahoo Finance and look at how the global markets have been doing. So those of you who have been visiting Yahoo Finance on a regular basis would note that the layout has changed. Takes, I guess, getting used to the new layout. Everything, however, is in one page. So to start with, we have the S&P 500, the Dow Jones, the Nasdaq, and the NYSE Composite. All of them pretty much flat as we speak, 0.01% to maximum of 0.45% on the downside, and another about 6 hours to go before the market closes, for 5 hours 20 minutes to go. Europe, on the other hand, just in case anybody noticed, the volatility index, the VIX for the S&P 500 is up. Typically it goes up when the markets turn bearish. The European index, starting with the FTSE, very much flat, as you can see, and on the right you can see that the chart intraday has just been fluctuating over the the neutral line, more up than down. We'll take a call as to how it moves at the end. However, till the UK elections is over, I think the FTSE is probably more or less going to just stay where it is at around 7,100. The DAX in Germany, quite bullish actually. Intraday you can see it going up, but lost its gains in the recent few half an hour or something. 0.28%, CAC 0.23% down, maybe a mild reaction to the the terrorist event plus the uncertainty of the election outcome in France. So I think most of Europe will probably stay where it is till the French election is over. Coming to the rest of the world, very much green across. You can see in Jakarta, in Malaysia, in New Zealand, though New Zealand lost a lot of its gains. There you can see at the end on the right side the intraday chart, how it just topped out. Yep, the Kospi, the Taiwan, everything, right? So mixed bag across the world as far as the daily view for today is concerned. So at best, I would remain neutral for the one-day outlook. Having said that, if we start looking at the charts, let's start with our Dow Jones. All right, so if we look at that, then very much flat, I would say. Looking at that was weekly. Let me make it daily. All right. So this is not a live chart. First of all, this is updated till yesterday. And today you could see that it was more or less flat. So we've got a downtrend in the Dow Jones, very much has broken this support line at 20,600, 20,400 is the short-term support. I would think that it could probably go down to 20,100 on the Dow Jones. So taking that, S&P 500 also definitely going down, except that it has really not broken that support line, this one at 2,340. However, the downtrend is definitely still there. We'll just have to wait and watch. If you look at the European stuff, starting with DAX, clearly that has now downtrend. We have the uptrend that was there from February has clearly been broken. Even in the most extreme uptrend line that one could put, that decisively been broken, and we have a clear downtrend on the DAX, right? And then looking at the FTSE, wow. So is this, yep, okay, didn't notice this. So this was probably on account of the surprise election that was announced by May. And the uncertainty associated with that, really nothing else. Come to its previous support, life support, as you can see, very much just sitting there. Is the beauty of technical analysis, just keeps amazing me over and over again. So down to 7118. Does it stay here or does it move up? I think my view is that it will probably stay here till the election is over. So we are already, just it's about 2-3 weeks away. The UK elections, in the meantime, the French election is over. So unless the French election turns out something really radical, quite likely that the Dow Jones could, the FTSE could stay here. If it breaks, however, then 6,900, 6,800 is definitely a possibility. Both in Germany and London, I would definitely not be looking at buying anything right now. Would definitely be a wait and watch. All right, so coming to CAC, France. Okay, this is a real surprise. I wasn't expecting to see this. So the French index went up quite sharply yesterday, but today, as you saw, very much flat, really not going anywhere. So maybe because of the flip-flop on the views as to who will win, not win. So best to, I guess, wait and watch. Having said that, the uptrend on this, for what it's worth, is also over. Right? So there you go. So the uptrend is over, and this uptrend might actually act as a resistance going forward for the CAC. So clearly across the world we've got bearishness only. We really don't have any bullishness. Most of the indices, most of the European indices are at important support levels, and just have to wait and watch as to how that pans out, probably based on events. The elections again there. Nikkei, just for the sake of completion, that's clearly, as you can see, been trending down from 19,600 right there in March 20th, has gone all the way to 18,300. So lost 1,300 points. That's almost 2%. One second. 1,000 points. Oh, almost 3-4%, right? So that's a big correction. It's back to its support levels, and we'll have to see where it goes from here. Well, I think the short of it all, friends, is that the global markets are in a bearish mood, and so are the Indian market. So coming back to Nifty, clearly this is bearish move, and just reinforces my view, given the global factors, that we are probably looking at 9,000 and not at going back to 9,300. So is a new high possible in the near term? Absolutely not, I think, unless some really spectacular news comes out. I can't imagine what that could be, but well, that's the nature of the markets. There's also, to point out, gap here, which has not been closed entirely. This gap that happened on 13th, 14th of March. So that's not been closed, and in order to close that gap, the Nifty will have to come to 8975. So 8975 is the least it has to fall to in order for the gap to be closed. Also around that 8975, rather exactly at 8988 is the 50-day exponential moving average. So quite possible, looks like that we're going to come there and test that support and close that gap, and then take a view thereafter. Also, the just to reiterate, 8,600 is where the 200-day exponential moving average is. So I'm not seeing any scenario here right now where the market could actually go up. It's looking more and more like it could go down. So let's go into the internals of this market, and then we look at our right. We look at the um, sector indices and take it from there, right? Okay, so looking at the sector indices, starting with Nifty, that's what we just did. Just freeze this there. Right. Coming to the next 50, well, okay, surprise, surprise. So the next 50, and this is something we noticed in the last the IMR, I think we did last time, where we spoke about the next 50 stocks, and we said there's definitely a lot of strength there, and this strength is getting reinforced again and again. So we've got a tweezer stop at around 26,050, and definitely no downtrend in the mid cap or the smaller cap stocks. So it's the large cap stocks which are definitely not doing well, while the mid cap stocks continue to actually do quite outperform the overall broad market index. Wow, this is a surprise. CNX 500 also not showing downtrend. So this is really surprising. We don't have a downtrend in the broad market. We don't have a downtrend in the mid cap market, but we do have a downtrend in the Nifty. Right. So this is definitely a split market, a very divided market. While the large caps are doing not so well, the most of the other market seems to be pretty okay and looking bullish, I would even say. To see the CNX 500 like this is well, I would say quite honestly a surprise. But there is some resistance there at 8,100. If it can break out of that, then it will go much higher, definitely. Having said that, one thing to note on all these in the S&P 500 is that while we really can't expect the indicators to keep going higher, we do have, in a sense, mild bearish divergence, which we'll see how it pans out. So yeah, so let's put that trend line there. I'm just trying to put it on a more extreme basis, and we'll see whether this trend line for the CNX 500 breaks down. So well, okay, definitely was not expecting this, and this is a interesting thing to dig into. All right, so now getting into the sector specific, industry specific rather, looking at the Bank Nifty first. So, well, looks like the Bank Nifty has definitely turned around. We've had a negative divergence which has been playing around for about almost 6 weeks now. And now what we have on the Bank Nifty index is a big shooting star, a big nice confirmation. So just let me confirm everything is there. 18. Okay. All right. Looks like one data point is missing. 18, 2021. Yep. I'm sorry. Not sure what happened. 18. Okay. For some reason, the 19th data point is not there. And yeah, I'll have a look at that later. I don't think it's going to really make any difference to the chart. Okay, one sec. All right, so we included the missing data, and really, like I said, really doesn't make any difference to the outcome. So what we have on the Bank Nifty is a nice shooting star. We've got a nice confirmation. We've got an attempted pullback, and then we've got a hanging man that happened today. And we had for the last 6 weeks a sort of negative, not a sort, a negative divergence which was there, and at play now is clearly this um, short-term downtrend which is there. And if it breaks 21,400, then I think we are quite definitely going to 21,000. That's almost a 500 point fall, 550 point fall on the Bank Nifty from where it is right now. One thing to talk about when we talk about this is this news that came out just a few, maybe half an hour back, okay, from Reuters. It says India benchmark bond yield at 7-month high, which indicates perhaps that a rate hike is on the cards on the next RBI policy. So is the RBI, or rather the dovish and the soft, and we've been cutting interest rates for, I think, for the last 5-6 policies by about 0.25% each time, and that might be at an end. So this article basically says that India's benchmark 10-year bond yield rose to its highest in 7 months on Friday, minutes after the rate-setting meeting contained strong warnings of inflation, dimming hopes of a rate cut in the short term, and sparking bets for a tightening move ahead. So, well, some of the comments were more hawkish than some of the traders expected, and a director of the RBI, MD Patra, has even favored a preemptive 25 basis point repo rate hike to contain inflationary pressures, although he finally joined the rest of the panel in voting 6-0 to keep the rates unchanged. So that was earlier. So this is where it is, and all right, so trying to figure out right. So looks like earlier there was a consensus that by the industry that the repo rates would be held at this level and that there would be no cut or no rise, but right now uh, um, that seems to have changed a bit. But also there is this other view that some traders in the market had still expected the RBI to cut rates given lingering concerns about economic growth after the demonetization move. Well, I'm not sure about this demonetization argument. I think it's behind us very much now. And well, what looks quite probable right now is that a rate drop is definitely not on the cards. If uh, anything, we could actually get a rate hike. So that's something that is interesting to keep in mind. So that's definitely a change in the direction of the monetary policy by the Central Bank of India. If that happens, then well, theoretically and all those things, money becomes more expensive, lending becomes more expensive, demand for loans becomes expensive, and the profitability of the banking system could take a hit, and we could actually see a drop in the banking stocks. So that's something to really keep a watch on. Also, there is this exhaustion gap, which I had mentioned here. Of course, now I should mark it as a runaway gap, which has not been filled, which well makes the market the Bank Nifty having to come down to 20,400. So this is on the overall Bank Nifty. So this is also giving us a pretty negative signal right now, right? So while we do that, look at the PSU bank stocks, and well, that PSU Bank index has gone over its multi-year resistance and come back to take support on it. So on the PSU Bank side, there's this thing about what the government is going to do to sort out the NPA problem and fix that, whether it's going to recapitalize it or it's going to take those NPAs off the bank books and put it into what is called a bad bank. All sorts of things going around. But right now, technically speaking, whether this turn that has happened in the last 2 weeks, whether this support level is in the shaded area gets broken or whether it takes support and goes up will be really interesting to watch. So it's quite possible that going forward, given the overall negativeness in the bank Nifty and some action that the government may not take to sort of revitalize the public sector banks, are we looking at a possible scenario where the private sector banks go down but the public sector banks go up? I don't know. Complicated to this, as we'll see in part 2, is that some of the private sector banks have actually done quite well. Right. Okay. So this is definitely a mixed picture. No longer are the banking stocks, all the banking stocks moving in tandem. So it's going to be on a case-by-case basis. Moving on. So reality, something that we have been quite bullish on for quite a few months now, just going from strength to strength to strength to strength, as you can see. Very strong bullish candles again and again, and really no sign of this weakening. As a matter of fact, this is actually getting stronger, this trend, and it is going up even faster. We had, I think, IB real estate go up 50% in one trading day 2 days back, and that was just amazing. Not sure what the news was, but that was really something to take a note of. So something definitely happening on the realty space, and what's important to note is that it's now breaking out of multi-year resistance zones and could easily go up to the 300 level on the index. So any correction that happens, as and when it happens on the reality space, would definitely be a great opportunity to buy. This up move is probably not over by a long shot. Okay, so we've got the reality index, and then coming to the other indexes, let's look at metal. Okay, so metal clearly has turned bearish, and this is something we did mention in the last several IMR, saying that it is getting top heavy, and as you can very clearly see, sort of head and shoulder top, right, left shoulder, head, right shoulder, a little bit of complex right shoulder, or even a double head, whatever it is. Neckline clearly broken. I would say that the measuring implication has not yet been met. 11,260 to 11,500, so about 800 points. So 800 points, it should go to about 5, 10, 3. Yeah, it's about, yeah, it looks like, this 200-day moving average, that's where it could basically come back down to, right? And maybe even fall to 10,570 is a distinct possibility, right? Okay, so as I was saying, the metal index probably has more to fall. So that's another one which is distinctly bearish along with the bank Nifty. The power index, well, that's really, showing strength, really going up, though some amount of weakness heading towards the resistance zone at around 2400. So it'd be interesting to see how far it can go up and then perhaps turn down after that. All right, so that's the power index. Then we've got, let's go back to the big ones. So auto. All right, so the auto was, or is rather, in a short and a long, short term and a long term triangle. As you can see, there's a short term triangle for the last 2-3 months. that seems to have broken down, but more or less it has broken down towards the apex, gone there, broken down, and then perhaps headed lower at this point, it would seem. The longer term triangle all the way from October, November last year, that is still a long way to go before it breaks down. Really can't make out much. Okay, so let me put that back for our future reference, and that will be the level to watch out. So the auto index also clearly really not uh, um, having any strength at this point. There is definitely a downtrend which is there from September, October. So one more major index which is neutral to potentially bearish. The capital goods index, on the other hand, very clearly is rising and rising. And the interesting thing is it is potentially coming back to its 2007-2008 peak. One of those indices one of the sectors which has really lagged very strongly behind, and it will be interesting to see whether it's able to make a new life high or not. Given the overall circumstances in looking at the overall market rather, the Nifty, the auto, etc. Of course, the real estate thing has been going up amazingly strongly. Not sure what the story there is. So this index could keep going up. As of now, definitely bullish, but I'm a little circumspect just on the issue that it's coming to at around 19,000. It's close to its life high, or a resistance zone where there's a double top made last year, or rather 2 years back, and we'll have to see. On the other hand, short term, this is definitely looking like a flag. So the capital goods space, mostly this is on account of LNT. Is there a flag there? It's really broken out. And then if this is a flag, it looks like a flag actually, very much 16,300 to 17,300, let's say, another 1,000 point move. So from 17.4 to 18.4 is definitely a good possibility. Now 18.4, 18.5 is where it will definitely get into that resistance zone, as you can see. So there could be a short-term long trade here, a bullish trade here, and then we review capital goods after that. Okay, looking at FMCG. So, so FMCG clearly a big fall today. Again, we've been having this negative divergence on FMCG for about 3 months. So this negative divergences have been playing around for months now on more than one sector, as you've already seen. And well, is the down move now going to accelerate is the question. So the FMCG also bearish, and this one is very strongly bearish. This sort of encompassing very bearish candle, very strong. There was of course the bulls here who tried to really take it up, but really were not very successful. And today the bears have I think decisively taken over. Quite possible that we are going back to 9,000 on the FMCG index. Then we've got the IT index. Let me put the CNX IT, and well, that's just been falling and falling and falling. Just to go back to the IT index over a longer term period, you can see that we've been in a downtrend on the IT index right from 2015, right? So from 2015, this point where the high point was made at around, life high was made around 13,000, it's just been going down, and you can see it comes to this more than 2-year downtrend line, and then just turns back down. So looks like the IT index is set to go even lower. The longer term moving averages are now turning down. All of them have actually turned down in the last 1 week. So really not much of any support or any help. There could be a short-term bounce with the indicators sort of bottoming out, but we'll have to wait and watch on this account. Okay, so this is yeah, the IT space very clearly looking quite bearish and looking like it's going to go down further. Again, as we all know, the recent results, annual and quarterly results, have really not been promising at all. As a matter of fact, the guidance also has been pretty muted for the quarters and the year ahead. So on a fundamental basis, we're not expecting much growth at all. And today there was a news article that Wipro is going to lay off about 600 people. Well, that's officially, but looks like this layoffs will actually gather momentum. And actually, there's the flip side to it. So as we know, if you have layoffs which are significant, now 600 is definitely not significant in any of the large IT companies which have lakhs and lakhs of employees. If the layoffs gather strength and it happens to really cut expenses, there could be a potential short-term run-up on the stocks as the profitability of the companies improve. But all said and done, the long-term picture is pretty bleak for IT. So IT is weak, banks are weak, metals are weak, and pharma started to be weak, and only two capital goods and metals were the ones, reality were the ones that were looking, which were showing any strength. Just to see if missed out on anything. Infra, well, infra, capital goods, sort of a mixed bag, more or less the same thing. This is at about 3,200 and looks like it could still go up, but then it's clearly in the resistance zone once it comes to those levels. So that is something to keep in mind. Okay. Okay, so infra and capital goods and realty. That's the only thing. All right. The real heavyweights, banking, IT, FMCG, have all really not done that well. So overall, I would say the balance is bearish to negative, neutral to bearish, and very little hope of a strong overall bullish market, at least from the Nifty stocks. Right, so which brings us back to the NSE 50, and just to reiterate the levels in mind. Well, 9,000 looks even more likely, I would say, right now. If IT just falls, FMCG falls. Oh, we forgot pharma. Second, right. Well, there you have it. So pharma also joining the bandwagon of bearish moves, and looks like pharma is at least headed to 10,000 on the index. That's another 2% down from its current levels, and that's also been in a 1.5 year downtrend clearly. So, and if you look at it from okay, CNX Pharma, let's put BSC Healthcare. Okay, that's also right. So look at this. So this is the BSC Healthcare Index right from 2000, and in a sense, we've had a one-way rally from the lows of 2009 at around 2,600 all the way to 15,000. So that's 5x, 6x, no, yeah, 6 to 7x move without any meaningful correction. At least that I don't see anything meaningful. Made this monthly chart, and after this run up from 2009 to 2015, tops of 2015 or somewhere. Yeah, now we've got some lower tops, lower bottoms on the monthly chart that we can see. So very clearly we are now in a sort of bearish trend on the pharma side. If some meaningful correction has to happen, just a vague thumb rule of 1/3, 2/3, halves, and all of that. So you've got to move from here to there. So I would say even a possible fall to 7,000 or 6,900 at these levels around, right? Is cannot be ruled out for the pharma. If Donald Trump really pulls the plug and becomes more and more protectionist on the um, pharma industry, he's already told them to reduce prices in a sense in that meeting he had with the pharma CEOs, I think couple of months back. And if they sort of follow through, then it's going to be a big hit on the Indian pharma space, right? So pharma not looking good at all. So that was the one last thing that we were looking at, and really nothing else. Okay, have I missed anything? Nope, I don't believe I have, right? So this is brings us to back to the Nifty, and I think very clearly Nifty lower levels are due. One should take bearish position whether you're shorting the futures, or whether you're going to trade with, say, bearish spreads with options, or take it naked put naked put positions, long puts. Really up to you, and probably should be getting out of spot positions on a perhaps case by case basis, unless you happen to be in any of those really strong bullish sectors. After seeing what I've seen, I somehow have to say that levels below 9,000 should be expected now. A fall about 100 points right now is just about 1%, 1.5%. It's really not much. A more substantial fall of 5-10%, a fall of about 600 points would take it down by about 5-6%, 7% from where it is right now. That would really start to look a little more meaningful. So yeah, looks like the bears are going to gradually take over. Also, so levels 8,600 on the Nifty. First of all, 9,000, then 8,600, and very unlikely to go above 9,200 in my opinion. Any move towards 9,200, 9,250, or even 9,240 or 260, or even a new life high, I think should be taken with a pinch of salt at this point. Levels on the Bank Nifty, I think now 20,000, 21,000 rather, is quite possible. You could short the Bank Nifty with a nice stop loss above 21,670, 21,700, with your target at 21,000 or 21,100 to be a little conservative. If that breaks, even 20,600 cannot be ruled out. So that's a bearish view on the Bank Nifty. Again, how you implement it, what products you use, and what strategy you use is up to you. The CNX IT, so that's one more thing to look at. Unfortunately, not very liquid, but I would say the CNX IT is at least going to 9,700, and you could short this with a nice stop loss at around 10,200, 10,250. Let me see if that CNXC, okay. So just looking at okay, something amiss with this data, and fix that later, but this is the CPSC index, right? ETF, not the index, the CPSC index. And what you can very clearly see here is okay, is that it has basically topped off, and this is the ETF. I'm just taking that as a proxy. So 29.50, I think it could easily fall to 28. So that's about 1.5 points down. That's about almost 5%, 5 to 7% down on the CPSC that we could get. Okay, just okay. So everything looking bearish, and well, that's it. I think really nothing much more to say on this part one. So it's been a pretty, I think committed turnaround. And if any of these other sectors which are really minor in terms of weightage, um, the metals and FMCG, etc. also, metal and not metal, sorry, realty, right, and capital goods also turned down, then this move down will definitely get accelerated on the bearish side, right? So that's the view on the overall market, and this brings us to the end of part one of this IMR, and then we will move on to having part two, right? Okay, so I'll send the link in a little while, and thank you and have a great weekend.